What's trend following, and does it exist in small intratrade timeframes?
So trend following is essentially what I'm doing. I'm always looking for what is the bigger trend on the higher timeframes, and I'm looking for a trend to be established on the shorter term timeframes, and essentially I'm looking for the bus to be going in that direction and to jump on it. So trend following is where there is either a trend happening right now and you're looking to get in, or there's no trend and you're waiting for a trend to establish. So it's really the one form of trading versus counter trend trading, which is you're following the trend or you're watching the trend, but you're waiting for the trend to end, and then you're trading against it.
How do you spot trends on the Forex markets?
So the first thing I'll do is I'll look at the higher time frames and I'll get a bias of where I think the overall time frame is. And then essentially I look at the phrase I use is I look at how the market is breathing on the lower time frame. So is it consolidating? It hasn't really taken a big breath in. It hasn't gone either long or short. So I'm looking at it. If there's a trend already established on the shorter term, then I'm just saying, right, it's taking a big breath in. I'm looking for it to breathe out. I'm looking for it to come back and then buy on the weakness or sell on the weakness, depending on whether it's long or short.
How would you assess its strength?
I will use multiple time frames for that. So the basic premise is if I'm trading long and I've got an upward trend on the 5-minute chart, if there's an upward trend on the 60-minute chart, if there's an upward trend on the 4-hourly, the daily and the weekly, then that trend is essentially, to me, stronger. Now that doesn't mean, however, and this is a key distinction, the strength of that trend is, to me, it's stronger, but that doesn't necessarily mean it's going to get to my target any more quickly, or it doesn't mean that it's going to get there without any movements back, so any breaths out. It's like it's human nature. You can't just keep breathing in. Markets have to come back. So strength for me is overall likelihood of opportunities for a longer period of time, but it doesn't mean they'll be any quicker or there'll be any more, because contrary to popular belief, traders can't predict the future. They're just using a set of criteria that give them an edge. They're not actually able to go, right, well, this will happen tomorrow. So,
damn it. Are there any indicators that measure whether a market's trending or not?
Yeah. Well, for me, I use moving averages. I think the best, we teach this to new students, the best indicator is price action, because that gets newer students and newer traders off the reliance of using an indicator where two lines cross or one level's at 60% or an 80% or whatever it is. So for me, it's price. And the reason I like moving averages is they're on the price chart as well. So for me, I'm looking at how the moving averages are moving, how steep they are, how much they're fanning out, and how many time frames that is happening on.
How do you identify if a trend is close to exhaustion?
So for me, you never know 100%. So I use a concept called divergence. So I will look to see whether or not if we're reaching an area of support and resistance. So number one, it's always support and resistance. So if we're at a 2-year high or we're getting close to a 2-year high, then my logic will dictate the last time we were here was 2 years ago. The only evidence I've got is 2 years ago we came down from that point, so I'm going to make the assumption that that's a good place to have a target. If I'm seeing price coming into that level and the price is making higher highs, but there is a divergence on the MACD or a divergence on the RSI, then that is an additional clue that that market could be coming or running out of steam. Technically, you can look at the size of the higher highs. So if the higher highs are getting closer and closer together, the distance between each one is getting less, then that is a potential clue. But I've seen that happen and then price hit the resistance, do a small move back and shoot through because something's happened macroeconomically. So I won't put 100% of my thought into that. I'm more concerned about where my target is rather than whether or not that trend is definitely over or not. Against it.
I'm guessing, if this is the method that you use, that it works.
It does, yeah.
How do trend followers manage the risk of sudden gap downs?
Well, I say, for me, huge gaps don't happen very often because I'm trading major currency pairs. A simple exercise that I was shown years ago was I took a currency chart on the daily time frame and then took a chart of BP, took the two together, and you see the chart of BP has got gaps all over the place. The currency chart is very fluid because the currency market doesn't have the open and closes like the main indexes. So for me, the way I prevent huge gaps on charts is I trade currencies and I trade main indexes, because you get the probability of those gaps is a lot less. Whereas on shares, the reason I don't day trade shares is it's a different set of market conditions, and with charts gapping, it makes it a lot harder.